Welcome back, looters. I am your host on Tick to Loot, the channel where we turn ticks into treasure. Today we are on Lesson 8.1 of Unit 8, Price Action Trading. In this lesson, we are going to cover the three main chart types used in trading: line charts, bar charts, and candlestick charts. By the end of this video, you will understand how to read these charts and apply this knowledge to your trading journey. Let's get into it. The first chart type we'll cover is the line chart. A line chart connects the closing prices of each period, creating a simple line that shows the overall trend of the market. This chart type is useful for seeing the big picture and understanding the overall direction of the market. For example, if we look at the Euro to US dollar line chart, we can see that the price has been trending upwards over the past few days. The second chart type is the bar chart. A bar chart shows the open, high, low, and close prices for each period, giving us a more detailed view of the market's price action. Each bar represents a specific period, such as a day or an hour, and the open and close prices are marked by the left and right edges of the bar, respectively. The high and low prices are marked by the top and bottom of the bar. The third and most popular chart type is the candlestick chart. A candlestick chart shows the open, high, low, and close prices for each period, just like the bar chart, but it uses a different visual representation. The body of the candle represents the range between the open and close prices, and the color of the candle indicates whether the close price was higher or lower than the open price. A green candle means that the close price was higher than the open price, indicating a bullish period, while a red candle means that the close price was lower than the open price, indicating a bearish period. Let's take a closer look at a green candle. If we see a green candle on our chart, it means that the close price was higher than the open price. For example, if the open price was 1.1000 and the close price was 1.1050, we would see a green candle. This indicates that the buyers were in control during that period and the price moved upwards. On the other hand, if we see a red candle on our chart, it means that the close price was lower than the open price. For example, if the open price was 1.1050 and the close price was 1.1000, we would see a red candle. This indicates that the sellers were in control during that period and the price moved downwards. Now that we've covered the different chart types, let's talk about time frames. A time frame refers to the amount of time that each candle or bar represents. For example, a 1-minute chart, or M1, shows each candle representing a 1-minute period. We can also use other time frames such as M5, M15, H1, H4, D1, and W1, each representing a different length of time. Now that we've covered the different chart types and time frames, let's practice switching between them on TradingView. Open up the Euro to US dollar chart and click on the Chart Type drop-down menu. You should see the options for line chart, bar chart, and candlestick chart. Try switching between each of these chart types to get a feel for how they look and how they can help you analyze the market. As you switch between the different chart types, notice how each one gives you a different perspective on the market. The line chart gives you a clear view of the overall trend, while the bar chart and candlestick chart give you more detailed information about the price action. The bar chart is useful for seeing the open, high, low, and close prices for each period, which can help you identify patterns and trends in the market. The candlestick chart is the most popular chart type, and for good reason. The color coding of the candles makes it easy to see at a glance whether the market is trending upwards or downwards. As you practice switching between the different chart types, try to identify the overall trend of the market. Are there more green candles than red candles? Is the price moving upwards or downwards? These are all important questions to ask yourself when analyzing the market. On the other hand, if you see a bearish trend, you may want to consider selling or shorting the market. Remember, the goal of trading is to make money, and the best way to do that is to follow the trend. Now that we've covered the different chart types, let's talk about time frames again. Remember, each candle or bar represents a specific period of time, and the time frame you choose will affect the way the chart looks and the information it gives you. For example, if you're looking at the M1 time frame, you'll see a lot of candles and a lot of price movement. This can be useful for scalping or day trading, but it may not give you a clear view of the overall trend. On the other hand, if you're looking at the H1 time frame, you'll see fewer candles and a clearer view of the overall trend. This can be useful for swing trading or position trading, as it gives you a better sense of the market's overall direction. Finally, if you're looking at the D1 time frame, you'll see an even clearer view of the overall trend. This can be useful for long-term trading or investing, as it gives you a sense of the market's overall direction over a longer period of time. As you practice switching between the different chart types and time frames, remember to always keep an eye on the overall trend of the market. This will help you make more informed trading decisions and increase your chances of success. Now, let's talk about how to use the information from the charts to make trading decisions. If you see a clear bullish trend and a green candle, it may be a good time to buy or go long on a market. On the other hand, if you see a clear bearish trend and a red candle, it may be a good time to sell or go short on the market. Remember, the goal of trading is to make money, and the best way to do that is to follow the trend. As you continue to practice and learn, remember to always stay disciplined and patient. Trading is a skill that takes time to develop, and it's important to stay focused and avoid making impulsive decisions based on emotions. Now, let's review what we've learned so far. We've covered the different chart types, including line charts, bar charts, and candlestick charts. We've also talked about time frames and how to use them to analyze the market. We've also discussed how to use the information from the charts to make trading decisions, including how to identify trends and how to use green and red candles to determine the direction of the market. As we conclude this lesson, remember that practice is key. The more you practice, the more comfortable you'll become with reading charts and making trading decisions. Don't be afraid to experiment and try new things. It's all part of the learning process. That is everything for Lesson 8.1, Chart Types and How to Read Them. If this helped you, smash that like button and subscribe to Tick to Loot so you never miss a lesson. Drop a comment below. What was the most useful thing you learned today? See you in the next lesson, looters. Keep turning those ticks into treasure.